Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going on this crazy evening, it's been about 2 weeks now already since we did a stream. A lot has happened recently, but first and foremost, if you're tuning in for the first time, we'd love to have you here. Definitely consider hitting that subscribe button below and hitting the bell icon. That way you'll be notified every time we go live or upload another video for you guys. I'm gonna adjust some things really quick because my screen, there we go. There we go. I just wanted to adjust a few things really quick, but yeah, so crazy what has been going on the last week or two since we have went live. I'm going to discuss everything that's been going on, like with me and my portfolio. I'm in the process of changing brokers. Those of you in our Discord group chat already know about that, which, by the way, if you're new, also we have a free, totally free, nothing here I charge for at all. It's just a community we got going on here. Our Discord group is down below. There's like 150 of us in there now, and that group is growing by the day, as this community on this channel is as well. If you don't know what Discord is, it's a free app you can download for your smartphone or for your laptop. I have it right here pulled up, and like I said, you can just click the link. It'll take you right to the group, and we'd love to have you there and talk with you guys. But man, has been crazy. Before we just get into what all is going on, like within the market, as we see, we've already hit limit down on the S&P 500 futures, down 5%. If I'm assuming if you've been tuning into the market recently, you already know what limit down is, so we're not even going to discuss that. The Dow is at 18,000. This is getting crazy now. My max pain originally that I expected on the Dow was 18, and then I updated it this week to probably 16 to 18 range. If it breaks, which it looks like it's going to 18,000 tomorrow, who knows, might have to keep adjusting that to the downside. Overall, I mean, I've said from the start, I think the very worst we'd see was, where was our brick wall back in the early, what was it, like 2010, 11? I think it was like 12, 14,000. That's the absolute max pain that I see, but honestly, hopefully that 16 to 18 range can hold, of course, right? But before we just get into all of that, I know there's probably a lot of you guys, hopefully not, but I know that there's going to be a few of you guys that either you're tuning in for the first time or you've been with the channel and with our group and whatnot for a while, that you might have gotten laid off. You might be told that your job essentially isn't needed right now. Maybe some of you, I know a lot of you are working from home now, and that's awesome. At least you're still able to work. My job, luckily, too, was labeled as an essential job. So even if we go into like some total shutdown, I will still be able to work, even though my work will still be affected because we're going to have customers drop off and cancel, of course, due to not having incomes. But I just wanted to, like, quickly, I'm going to try to keep it quick, try to not get on a soapbox or anything like that, but just how a lot of people, they get into the stock market or they start investing, they get ahead, they put the, what was the term? They put the cattle before the horse or something like that. I don't remember the exact term, but you get what I'm saying. Like you're investing money that you don't really have money to invest at the moment. And I just kind of want to lay out kind of like what's worked for me, what's worked for us, me and my fiance over the last few years. And then we'll get into the stock market and whatnot. So first things first, if possible, obviously you want to get $1,000 saved up just as quick as possible. If you have your job still, do this. Like, do this right now. Put everything on hold. Don't worry about getting in the market right now. You need to do these like step by step. And these are honestly most of it straight right out of Dave Ramsey's Total Money Makeover book. If you don't know what that is, I would suggest you read that. I don't agree with 100% everything that's in there, but the first couple steps I absolutely agree with, and I'm just laying them out for you guys in layman's terms real quick. You just need to get $1,000 saved up as soon as possible. It's not a lot, but it's a quick little emergency fund for you to have just to fall back on. And normally, step number 2 would be to pay off all your debt. Now, if you have less than like $1,000 or less than, I would say, depending on your income, less than $1,000 to $5,000, still do this. Go ahead and knock that debt out. Just have it out of your life. That way, if for some reason you lose your job, you have less payments to worry about. Again, this is if you only have like less than $1,000, less than $5,000, depending on your income currently. Go ahead and knock the debt out. If you have a lower income, do not worry about it. Or if you have more debt than $1,000 to $5,000, do not worry about the debt right now. Worry about just piling cash. Just literally take all of your money and just pile it up. I don't even want you necessarily to put it in a bank. I mean, you can, of course, it'll be direct deposit anyways, but just have this cash ready on hand, be a debit card, cash, whatever the case may be, not a credit card, for Christ's sake, guys. Do not put it on a credit card. Just pile up cash as long as you can. We're actually doing this as well, even though I am still keeping my money that's in the market. Everything else right now, we're just piling up money, because even though my job is labeled essential, that doesn't mean that they may not have to do layoffs later on down the road with everything that's going on in the economy right now. I know for my job personally, just on Friday, I had 2 customers. One turned me away at the door because they're canceling because their husband just lost their job. And then the other one said we're at least procrastinating off 3 months from now. So that's two $100 to $150 jobs just for my route alone gone for the month, which normally just compound that times 20-30 technicians that we have, and you can see how that money starts to compound. So we're just preparing ourselves too, but anybody that's still working, you should be doing the same thing. And this all starts with a simple budget, guys. Literally, I've suggested this app over and over and over again, and I'll probably pull it up for you guys right now. Hopefully our stream's doing okay too. I haven't checked it out. We got 3 of you tuning in. So the app that we use for our budgeting, I've told you guys about this one time and time again. It's just called the Every Dollar app. It's totally free. It's my favorite one to use. It's so simple and everything. Our budget's kind of messed up this month. We need to adjust it a little. As you can see, a little bit over budget from grocery and whatnot. We've already, like most of you, I'm sure, maxed out your grocery budgets. But I mean, literally, it's such an easy app to use. And like you can see right here, I got it pulled up on our laptop version as well. So I definitely suggest you guys check that app out. If you haven't done a budget already, it makes it super easy. You'll be able to do your first budget in literally 10 minutes. All you need to do is be able to know your income, just plug it in, and then just start knocking out one by one. What's our housing payment? What's our utilities going to be? What's our internet? What's our grocery? And with grocery, trust me, you're going to want to go over on that, because you're going to get it wrong the first time. Better, if you think you're going to be $200, go ahead and do 4, because more than likely the first time you're going to miss it by $100 to $200. You're probably going to on average do double what you think. Like, we originally thought that we were going to do like 200, 250. We ended up doing like 400 to 500 the first month. So whatever you think grocery is going to be, double it. Utilities, you tend to know what those are month to month. Electric and whatnot might fluctuate a little bit, but so on and so on. Cannot stress the budget enough. And with the budget, you'll realize you have, usually in most people's cases, upwards of 500 to 3,000, again, depending on your income and whatnot, where you live, housing and all that. But most people have between 500 to a minimum of $1,000 per month just sitting there. So take that money, like we said, just pile it up the next few weeks, few months, until the storm passes. That way, if for some reason you do get laid off, do not rely on the government, guys. I know there's a lot of talk about stimulus packages and whatnot getting passed, where families of 4 are going to get like $3,000 or $2,400 or $1,000 per adult, $500 per child, blah, blah. Do not rely on that. Like me personally, if we get that, awesome. Honestly, we'll probably just either roll it into the stock market, put it in our just additional savings, whatever. But like, we're not relying on that, and you guys shouldn't either. Now that we're already knees deep into this situation, obviously you might be relying on it more than other people. But control what you can control. Take advantage of the money you're still making. Be thankful that you still have a job, because as we're going to talk about here in a minute, jobless claims are coming out this Thursday. Of course, they come out like every week, and they're expected to go. They've already jumped up to about 300,000, which I think about 180 was the expected originally, and now they're talking about over 2 million jobless claims possible just for this week. This is just for a week-to-week jobless claims. So crazy times ahead for sure. So I can't say enough, guys. You got to take control of your money. Once the economy starts rolling again, everybody goes back to their stupid habits, and I want you guys to not do that. Take advantage of this. Learn from it. If you're in a tough situation, own up to it. Don't blame the government. Don't blame the virus. Blame yourself, because at the end of the day, we are the ones that control our money, control our finances at the end of the day. I'm not trying to shame anybody or anything, but that's just the fact of the matter. Once you realize that you're the problem, but that you're also the solution, that's when things really start changing. So, like I said, I don't want to make that too long. It's just, I cannot stress enough to you guys the importance of just budgeting your money, knowing how much money's coming in, what's going out. That way you can have money to either in the future throw money at the debt, get the debt paid off, or continue to build that savings. That way when these days come, which they come every 8 to 10 years on average, we know is when the average recession takes place. So when that happens, you are prepared. You've got your 3 to 6 months of emergency funds. That way, if you or your spouse or both you, heaven forbid, lose your jobs, that you will at least be okay for a few months, ride out the worst of the storm, and then hopefully find some new work within those few months, of course, or preferably a year. I always say the rule of thumb is to have 3 to 6 months of emergency fund. I prefer 6 to 12. That's just me, because you never know really how bad that next downturn is going to be. So, but you got to start somewhere, of course. So I cannot stress enough, figure out how much money it takes for you to live off of, not including bullshit like Netflix and Hulu and subscription-based services, Apple Music. Cut all that BS out, because if you are in dire need of just living, you're not worried about that stuff. Just factor in food, utilities, housing, gas for your car, insurance, that type of thing. That's it. That's all you need to be figuring out. Like for your month-to-month expenses, multiply that by 3, 6, 12, however much you want for your emergency fund, and then get to work. So with that, now we will go ahead and get into the stock market stuff. Had to get a big drink after that. But I think right now, actually, the president or vice president, somebody might be speaking. I might pull it up at some point just for a brief second. I'll pull up the news too, just to see if anything's going on. Nothing at the moment. That was a few hours ago. But anyway, so the whole point of like the stock market and everything now. So it's been a couple weeks since like we had a stream of any kind when it comes to the stock market. And me personally, I'm just going to kind of lay out. I got to hear from our Discord group chat. Those of you that are in there already obviously read all of this more than likely. But I'm just going to lay out kind of the trades that I've had over the last week. This is from just this last week. So just laying it out there, like everything that I did and whatnot. So for one, I'm switching brokers. You guys know that I love Tastyworks. And I suggest them for a lot of traders, especially those that are looking to trade options and futures specifically, because our options, like the platform, is geared specifically for trading options. It's great, low fees, all that good stuff. And futures, the fees are super cheap as well, super low. But whenever I was comparing some of their fee structures and whatnot and commissions to TD Ameritrade just came out on top. And then not to mention the whole factor of bouncing back and forth between Thinkorswim for my charting, then Tastyworks for actually submitting the trade, having to hop back and forth, that can be a hassle. So once I factored in just the hassle factor and the fact that for my type of trading styles, which is like the vertical spreads and all that kind of stuff, TD Ameritrade actually came out on top on the actual like cost of fees and commissions and all that. The commissions are more for trading futures, of course, as I'm sure most of you know. However, you can negotiate those commissions and whatnot once you get more money in your portfolio. So once I build my portfolio up to say $10,000 to $30,000, somewhere in that range, maybe even sooner, 5, 10, 50, who knows. I'll just play it by ear, and I'll go negotiate with them about getting lower futures commissions. But I'm in the process, though, of slowly transitioning my money over to TD Ameritrade, and I will be trading with TD Ameritrade for the most part going forward, so I won't have much trading going on this week. The money should be hitting my bank account hopefully tomorrow. It sounds like most, if not all of it, should tomorrow, if not Tuesday at the latest, and then it will be available within the next day or so from TD Ameritrade. So hopefully by Wednesday or Thursday at the absolute latest, I will have some funds in TD Ameritrade. I am still holding 4 or 5 shares of SPY, and those I'm probably just going to hold for a while because the average price is at like 280 something. So I mean, those got a while before they're going to be profitable again. But I'm not going to sell those for a loss. I'm not in like a huge dire need of that money or anything like that. So yeah, they're going to be down like $60 a share. So, I mean, that would just be ridiculous. If anything, I might buy some more in my TD Ameritrade account once I can do that this week. But yeah, for my actual trades this week, I'm going to try to just go through them as quick as possible because there were quite a few. I traded, and I'll get each stock pulled up. So I trade Delta Airlines a couple times this week. We'll just get the 5-day chart pulled up from the last week. So we traded Delta Airlines for an average price of $22.67 per share. Ended up selling them for $24.22 per share for a profit of $23.25. Traded just 2 shares of O, which is a realtor, it's like a REIT essentially. Traded just 2 shares of that and got in at $46.50, just sold for $48.30, just a little $3 to $4 of profit. Then we sold Blackstone. I think we did this one a couple of times, but for the first set of trades on Blackstone, we got in 5 shares at $33.50, sold it for a whopping $40.05. So you can see I bought it super close to the bottom and then sold it on the rip. I think I sold it the next day to avoid a day trade. I sold it around here, if I recall. Yeah, it was like Thursday morning. And that profit ended up being $32.75. I think it's like an 18% return. That was a really good trade there. Then we did a SPY credit spread, a call credit spread that was going to pay us $123 of max profit. We sold it back a day later for $80 debit, which ended up being a $43 profit after fees and commission, somewhere around $40. So a pretty good trade there as well. Then we traded American Airlines. We did quite a bit with the airlines this last week. We bought 20 shares of American Airlines at $16.15, sold them for $17.50 for a $27 profit. Then I had a share of SPHD I kind of forgot about, and I sold it for about $1 of profit. And then we played around with Target a little bit. We bought this last week for, what was it, $99.25. Sold it for $103. So just a $7.50 profit on that. And of course, there's no fees or commissions practically anywhere anymore on stock positions, so you can take that into account too. Like, this is all net profit that I'm telling you guys. Then we did another SPY credit spread, a call for $75 credit, sold it back for $50 debit, so that was just a little $25 profit. So that came out to about $160 of profit. Now the kicker here was we had a share of Amazon, and that was spot on margin, which I'll do a whole video just about margin and whatnot and how it cost me what ended up being like $200, something like that, $230, something like that, dollars of profit, because I was not able to hold it because I fell below the margin requirement. So I got forced to sell it. Essentially, I was in it somewhere around like 18.20 or 19.20, something like that. And obviously, I ended up having to sell it, and it ended up being, all I know is I have it here, let me see, $231 loss was what I had to force sell it at the time. So just for simple terms, don't do margin, in my opinion, unless if you have at least $500 to $1,000 of, like, so your requirement is going to be $2,000 to even have margin. I would say do not trade margin until you're at least at $2,500 to $3,000 in your account, period. And then not to mention, say you're using your margin and whatnot, so say you had $3,000 in your account, that means you have $6,000 of buying power for most brokers. Say you got up to about $5,000. So again, only $3,000 of that's yours, but you're trading with $5,000. Right around there is where I would cut it off. Like, I would not come within $1,000 of your margin, because then you're gonna get, if you get too close, like this Amazon trade, for example, I ended up having to cut it loose. If I didn't have to cut it loose, I could have pretty much sold it for actually a slight profit actually on Thursday. So I mean, that really blows. It was a lesson learned. So on the week, I was pretty much, because of that, I ended up being down around $60-$70 on the week. But again, that was a mistake, lesson learned. Hopefully you guys can learn from my own mistake and not make the mistake as well. Again, like I said, I'll do a whole video just about margin and how it works, all that stuff. That way you guys don't run into any potential mistakes like that either. Because if it wasn't for that, like I said, all the other trades that I did, Amazon I was planning on holding for a long time, honestly. I wasn't planning on just day trading. I was planning on holding it kind of like a SPY position, my shares that I have. But all the other trades added up to about $160 of profit. Every trade actually was profitable this week outside of that Amazon one that got forced sold. So overall, it was not a bad week. We were pretty much playing catch up because of that Amazon sell. But man, let's take a look at SPY really quick. So it's all the way down to 226.40, which is probably not going to move a lot now. It's still going down a little bit. Probably won't move a whole heck of a lot right now since, of course, the futures market is now halted for the night until, I don't remember if it's going to be halted all night or if once your ask or bid, whichever, hits 50K, they might open it back up. I forget the exact rules for opening and halting the market. That car was a little obnoxious. I don't know if you guys heard that. But let's take a look at everything else. Gold is up a little bit here. I don't have much futures. So down, like we said, is around 18. Oil down 6%. It was briefly just below 21. It's back above 21. What have I said over and over? Like, yes, we have a whole bunch of stuff going on, of course, within the markets. But like I keep saying over and over, the market goes as oil goes to a certain degree. And man, oil has just been getting clobbered. I mean, it's down now, about 60 to 70% over the last just couple months, really. If we go, let's just pull up let's do 90 days. So you can see we hit the high right around January 7th, $65. So yeah, literally in about 3 months, not even 3 months, about 2.5 months, we've dropped about 60-70% just on oil. So, and I called it out right before this drop happened. I said if oil continues to go down, the market's going to drop with it. Again, of course, we have the coronavirus and all that, so it's not just simply because oil, but obviously oil is not helping at all. I guarantee you, if you go back and just look at the last week or two of trading, every day oil's been up, the market's been up. It's just how it goes whenever we're kind of in a bear market. As oil continues to drop, the market drops with it. And until we get oil at least back over $25 to $30, I think $30 really is what it has to get back above before we see some sort of bottoming, not just in oil, but in the markets overall. Gold, I mean, it doesn't really matter at the end of the day. We like to see gold going down, but as you can see, gold has dropped from that $1,700 mark as predicted. Double topped right around $1,700 and came down with the market. So there's not really an inverse correlation really going on there right now because, I mean, everybody's just selling everything right now. So there's really no correlation with anything right now. But what I will say is if we see some sort of bottom or we find a deal like with the Saudis and Russians, OPEC, all that, once we see that happen and once we see oil bottom and start to go back above 30 to 40 bucks, I almost guarantee, I won't say 100%, because obviously coronavirus just keeps getting worse. That's going to keep the market from going up much. But I do think the market will bottom once oil starts to go back up. It doesn't have to shoot up to 60, anything ridiculous like that. I mean, if we go back to 08, 09, oil shot up clear over 100, was like 100 and 120. We looked at this a while back. Let's do a custom. So I want to go. Why? How the hell? Okay, here we go. 20 years. That's what I wanted to do. And we will do 20 years, and we'll do 1 week. So yeah, it went all the way up to about $150, even though the market, if we go back to ES, even though the market, would you notice, like, the market was still bottoming there. Like, it's hard to explain. I mean, they're two totally different scenarios. Back in 0809, there was obvious, like, economic troubles that were causing that massive bear market we had back in 0809. This is simply from a virus, and then oil's not helping it. Now, again, like I say, though, I mean, when we go back and look at oil, you can see that this had just gotten way too high, which coincidentally is right around the same time that the S&P 500 is really starting to drop close to the low. I don't think we made our low until sometime very early in 09, if I recall. But what did you notice there? The market really started enhancing, the sell-off really started enhancing in oil. And then also, if you go back to ES, you can pull it up yourself too if you want. ES also started to bottom in early 2009, and then what happened? You started to see a slight recovery in oil, and then oil prices kind of stabilized right around that $70 to $90 range for a while. And then in 2014, I think we also had a decent, not quite a bear market, but we had a pretty good correction in 14, if I recall, too. And then what did we see? We saw oil recover. The market did, too. Obviously, overall, oil is on a downward trend. The whole point of what I'm saying, though, is if we find a bottom in oil, you're more than likely going to see the market at least find a bottom. I'm not saying that the market's just going to shoot straight up, because the market's not going to shoot straight up until the coronavirus passes, period, end of story. Until cases start to go down, even then the market's not going to shoot straight up. The market will not shoot straight up until everybody's back to work and the coronavirus is just wiped out. Once that happens, I think you're going to see the market just shoot straight up, honestly, because outside of the virus, there's really nothing wrong with the economy whatsoever. So I think just as quick as it's gone down, it's going to shoot back up practically. But in the meantime, we're searching for a bottom. I thought maybe last week we were finding that bottom. You can see we were kind of hovering around that 20, we'll just call it 2,300. We were hovering right around 2,300 to 2,400 roughly most of the week last week. So I was kind of thinking, I was like, who knows, we might be trying to search for a bottom here right around that 2,300 level. But obviously after tonight, it did not hold. So next level's probably 2,100. I'll have to look back and do some technical analysis tonight. Have to probably pull up the 10-year, 20-year charts and get to work on that. Just kind of see. Might even have to pull up like a monthly chart and just take a look, really. Because, yeah, I mean, just from a quick glance, it looks like right around 21 to 21.25 is going to be our next. Yeah, right around 21 to 21.25. Again, this is just a quick glance. Might be where we find a little bit of support or bottom, so to speak. If not, then probably 1,800. So, man, I mean, it could get ugly. What can we say, right? So, it's already ugly. What are we talking about? I mean, we're now, almost 13, not quite, 1,223, 24 points off of the all-time high on the S&P 500. And as for the Dow Jones, how much are we off now? About 11, probably after tomorrow, 11 to 12,000 points off of the all-time high. So, I mean, it's a good buying opportunity, guys. I'll say that. Like, I mean, I don't want to be too gloomy. I am a bull of all bulls, and I will say, like, this is going to be one of the best buying opportunities, at least in my lifetime, probably. I'm sure there'll be a couple more in my lifetime, but it's going to end up being one of the best buying opportunities for sure. I mean, look back to 0809. That was one of the best buying opportunities of all time. These do not happen every day. These happen, as we see, usually every 8 to 15 years, usually on average around 10, which coincidentally we're about 10, 11 years from that 0809 bottom. So it makes total sense at the end of the day. The market was looking for any reason to sell. Honestly, the last 2 years. I mean, the market has just been super choppy and volatile the last 2 years. We've been in kind of a more secular bull market than anything, not just a traditional bull market. Um, and it was looking for any reason to sell. The price action from January, February kind of indicated that we were kind of topping. If we go back and just look at like the 180-day chart, let's see, let's pull up the S&P one. Get this pulled up here. So the 4-hour chart makes it hard. So, I mean, as you can see, we'll pull up the daily charts. It's a little easier. You can see, I mean, back in January, at the end of January, we had that little push down. And then we pulled back up just a little bit, and we just ran it. I mean, it was looking for any reason to sell in January and February. And then coronavirus came around, and bam, obviously we just took a shit from there. But at the end of the day, it's going to go down as, like I said, one of the best buying opportunities in the last, God, probably 50 plus years. I mean, since the 87 crash, more than likely that flash crash that happened. Because, I mean, let's just go back to max available, and we'll just do a monthly chart. So how far back does this go? 83. Monthly chart kind of makes it difficult. Let's see if maybe the weekly chart. Didn't mean 3 week. Let's see, time frame, max available. Okay, so this might be a little bit easier to read. So, I mean, when have we had opportunities like this? So we had one back in, obviously, 2001, 2003. We were kind of on a downward trend in the market. That was an amazing buying opportunity. We came up. And then, obviously, 08, 09, we had that sell-off. We bottomed again around March of 09, about 11 years ago to the day. And then, of course, we've just ripped ever since. So again, what do you expect? It's another great buying opportunity. Honestly, we might even look back a year or two from now and see the S&P 500 back at 4K. It would not be a surprise at all. 4K might be a stretch. 3,500 definitely is not one though. Point is, if you've got the money, again, going back to kind of what I said at the beginning of the video, if you're tight on money, now is not the time to be investing. But if you've already got your emergency fund, like you feel safe, you pretty much don't have much to worry about in terms of worrying about paying your bills, covering food, water, all that stuff for your house, and you've got extra money to put to work, then now, of course, is going to be a good buying opportunity. Stocks that kind of I'm looking at right now are the ones essentially that I've been playing the last week or so. Amazon, Apple, SPY just for a traditional ETF, Coca-Cola, MasterCard, McDonald's, obviously the Qs, another ETF that follows the NASDAQ if you don't know, Microsoft, energy, no, not so much, but I have it there just for reference, Target, not playing ExxonMobil, Facebook I'm looking at. I don't like it. I want to see it around 130, 120 again before I'm interested, but definitely keeping an eye on it. Utilities, good defensive ETF, XLU. American Airlines, I prefer Delta, but American Airlines is hit so hard right now. Its PE is at like 2.7 if I remember right. The price to earnings ratio, it's at like 2.9. UPS, another good defensive name. I want to see it around 85 again, maybe even lower before I buy in. Verizon, I like AT&T more for an actual. At first, I was more so Team Verizon. You can pick either one, honestly. I'm starting to lean more towards AT&T for numerous reasons I can get into in another video. Blackstone BX, the one that we played earlier this week, I like that as well. They have like a 7% yielding dividend right now. Chewy, a good little speculation trade investment that I like. Obviously, the REIT. Like I said, I like Delta Airlines, DAL. They also have like a 6 to 7. I think it's actually up to like 7.25 now. Obviously, it could change with everything that's going on, but like 6 to 7% dividend as well. I like Dollar Tree, pretty good defense. As you can see, it was up on Friday. Let's take a look at Dollar Tree. Actually, I want to take a look just at like Dollar Tree, Walmart, those companies. They're still getting hit. As you can see, Dollar Tree's down about $30 from their high. But if we look back at the last 20 days, what do you see? It's still in a downward trend right now. It's probably going to go down this week a little bit, but this I'm definitely looking at doing some buying in the coming weeks, maybe even this week possibly. Like I said, I like AT&T as well. And then Walmart. Walmart is interesting. I mean, this thing has kind of been shooting up recently. You can see it's hit a new all-time high of 128. It's obviously came off of that. It's probably going to retest $100 in all honesty. Once it gets down to around $100, I'm interested because their earnings are gonna, I mean, the ones to watch for like these upcoming earnings, which by the way, if you don't already, I suggest you guys getting a planner just to kind of label like what earnings are coming up, dividend dates are coming up, all that good stuff. A planner, obviously you can use your phone, but I just prefer something that I can actually pick up and remember to like look at. When I'm on my phone, I'm BSing most of the time. I'm not thinking a lot of times about like my calendar and stuff like that. So I mean, you can get planners for like $1 to $5, and I write down all the important dates on there. That way I can know to look at certain stocks and whatnot at certain critical times. But Walmart I definitely like. If you can get it for $100 or less, I think it's a good buy because I think Walmart, Target, Amazon, Dollar Tree even, I think companies like that are going to shoot through the damn roof coming on these next earnings, because I don't know if you guys have noticed, there's a lot of people freaking the hell out buying everything and anything in the stores. I just went again this morning. It's been almost a week since we've done any shopping, and my God, I mean, there's nothing in the stores. So I mean, these earnings are going to be through the roof, and then obviously you got the other companies that produce like Clorox and all that are also probably going to go through the roof. So there's definitely a lot of good buying opportunities out there. We can continue through the list. Home Depot, Lowe's. I kind of like Home Depot more. If you don't got a lot of capital though, Lowe's still isn't a bad option. I just prefer Home Depot personally. And then what the hell is RCL? I forget. RCL. Oh, Royal Caribbean. And that I don't like, but it's just so low. I mean, good God. I mean, let's take a look at this. For obvious reasons, right? Just hit the hardest. Cruise lines, hotels, casino, all those, they're getting just absolutely clobbered right now. I mean, they're down 70-80% in some cases. I'm just keeping an eye on Royal Caribbean. If this thing can start to find a bottom along with the airlines and everything, that's something to watch too when you're looking for when the market's going to bottom. Once you start seeing these cruise lines, airlines, hotels, those type of things start to bottom, those are the things to really watch. Oil, cruise lines, airlines, hotels. If you start to see those kind of bottom, you're going to start to see the market overall bottom. Guarantee it. That's what's pushing the sell-off is. And Boeing too. Keep an eye on Boeing. Don't invest in Boeing, but if Boeing ever finds its footing, they're in a world of trouble right now. But if it ever finds its footing and gets its act together, those 4 to 5 things will cause the market to find a bottom and start to go back up. So yeah, we don't have a lot of questions from you guys. I haven't checked on the stream in a little bit. Looks like it's still doing okay. We only have a couple of you tuning in tonight. I'm sure a lot of you guys are probably still watching the Mike Pence thing, if it's still going on at the moment. But yeah, I really just wanted to hop back on here to just catch up with you guys, those of you that aren't in our Discord group chat and whatnot, because I know there's like over 900 of us now here, so I definitely want to thank you guys for that. Over the weekend we hit 900 subscribers. It's just awesome to see that continue to grow. But more so than anything, like I said, if you guys aren't in our Discord group chat, I definitely suggest you guys hop in there. We'd love to communicate with you guys, just bounce ideas off one another, and just help each other grow as traders and investors, and just grow financially at the end of the day. That's what we're all about over there. But like I said, overall for the week, not a bad week. All trades made money outside of that Amazon lesson, the margin lesson. That will not happen again. But overall, not a bad week. Cannot complain. Like I mentioned earlier in the stream, I am switching to TD Ameritrade for my broker. If you didn't hear the reasons and whatnot, you can just rewind it here in a little bit. It's just a quick couple minutes. I think I mentioned it like around 5 to 10 minutes roughly in the video. Yeah, just to keep it short, just has to do with fees and being able to trade pretty much 24/7, where Tastyworks just kind of limits me. So that's just keeping it short. I still like Tasty Trade. Tastyworks is the actual name of the platform. Tasty Trade is their YouTube channel, but Tastyworks is for sure like the best, one of the best platforms out there. I still recommend them to you guys, especially those of you that are more so geared towards options and futures. But for those of you that are more geared toward equities and maybe options secondary, kind of like myself, like I'm more towards equity, options, futures. I will be more into futures once I have a lot more capital in my account. But for the time being, I'm more so into equities and options. And when it comes to those, TD Ameritrade just offers less in terms of fees, commissions, and like I said, I can trade right here pretty much 24/5, 24/6, whatever, where Tastyworks, the only thing you can really trade 24/5, 24/6 is futures, because there's a lot of times where I would have been able to cut my profits, like be able to cover my profits in the after hours on certain stocks, and then because Tastyworks doesn't allow after hours trading on stocks, it's come to bite me in the butt a couple times. Not to the point where I lost money or anything, but when I could have made an extra 2 to 4% versus what I ended up settling with. Prime example is my Blackstone position, which still made like I said 17-18%, but when I could have made about 20-25%, I mean that starts to add up over time. So those are the main reasons that I decided to go with TD Ameritrade. And then obviously, like I said, the simplicity of just being able to just stick with the Thinkorswim platform versus hopping back and forth from Tastyworks to Thinkorswim and getting confused from time to time of, oh wait, I thought the price was this, now it's jumped $1 or something like that. It's all right there. I can just do it boom, boom, boom immediately. So, like I said, I love Tastyworks. It's an awesome platform. If they literally could just make it where you were able to trade stocks after hours and pre-market trading, I probably would have stayed, honestly. I mean, the fees and commissions weren't large enough to really complain about in terms of difference on options, like for the vertical spreads that I like to do, covered calls, covered puts, that kind of thing. It was only about $1 difference per trade. So again, nothing major. I mean, sure, if you're doing thousands of trades, that's thousands of dollars more. But me personally, with options, I only do a few hundred a year, so it wouldn't be a huge difference. But whenever it's costing me a few percent on trades because I can't cover my profits in after hours trading, that's where we have a problem. So it's not a big deal. Like I said, I still love their platform. Might even go back one day, especially once I start trading futures and whatnot. If TD Ameritrade does not lower their futures commissions and whatnot, then for sure I'll be going back over there. Like I said, still love the platform, still suggest it for you guys, especially those of you that are more geared towards options. But as for me right now, with mostly trading just straight up equity, stocks, ETFs, and then options, it's just the best move for me right now, at least. So with that, I guess we will go ahead and just start wrapping up. If you guys don't have any questions or anything, if you do, I'll give you guys just a minute as I wrap up and everything. You can shout them out in the comments or anything. That's what we're here for at the end of the day. But like I said, guys, I can't stress enough, if you're not already in our Discord group chat, like I always say, it's totally free. We don't charge for anything over here. It's just a community we're building of just like-minded people looking to bounce trading ideas off one another. We're all just looking to make money in the market at the end of the day. So if you don't already, if you're not already in there, hit the link in the description box. It'll take you right there. Like I said, we got like 150 of us in there now, so it's awesome to see that continue to grow. And then lastly, like I said, if you haven't already, make sure to hit the subscribe button below and hit that bell icon. That way you'll be notified every time we go live or upload another video. As for this week, I don't know for sure if like I said, I'm not going to have a lot of trading activity going on, at least till Wednesday, Thursday, because of me changing brokers and whatnot. So I probably won't do like a middle of the week video this week, unless if I do some sort of like teaching video, like the whole margin thing that I went through with my Amazon share. I might do a video like that for you guys, but if not, then we'll for sure be back again Sunday right around futures market open. So again, like I said, before we sign off, if you haven't already, make sure to hit that subscribe button below. And if you like the stream, definitely make sure to smash the thumbs up button. Or if you didn't, hit the thumbs down. Either way, I just want to get feedback from you guys and know what you guys like and don't like at the end of the day. And of course, if you see this after the video uploads, after the stream uploads to a video, and you have questions, feel free to shout it out in the comments once it uploads as well. But other than that, hopefully you guys are staying safe out there. Hopefully you guys are just protecting your money. Like I said, now isn't the time really if you're in a crunch with money. Don't be worrying about looking to make money in the market right now. Worry about protecting the four walls, and then from there worry about making money in the market. The market will always be here to make money. Now, like I said, is an amazing buying opportunity. But if you don't have the funds available, just worry about sealing up those four walls at the end of the day. And if you didn't hear my spiel about that, scroll all the way back to the beginning for a few minutes and you'll know what I'm talking about. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And I'll see you guys either sometime mid this week or for sure about a week from today. Until then, take it easy, guys.